Hello and welcome to the December 19th edition of the Gold, Goats, and Guns Market Report. My name's Tom Luongo. We've got a lot to talk about. So I'm going to be short on charts today and long on commentary, just so we have an FYI, because there's a lot happening. Today we've got the FOMC meeting. We've got a report of Trump deciding that he wants to pull out of Syria. We've got, all sorts of stuff to talk about. Belgium's government fell. Let's get right to it. So we're going to be here for a little while. All right. Syria. Let's talk about this immediately, because my initial thoughts on this, and I'm going to expound on them as I go through the day. Because Camille literally asked me, okay, so what does this mean? Best case, worst case scenario. And my initial thoughts here are that Trump is setting up something that actually could be good, and the question is going to be whether or not the Pentagon lets him or not. Somebody said to me the other day is like, look at what's going on here. You can't get, the generals keep telling him they're not going to they're not going to do what he wants to do. And I'm like, is he president or what? It's what it comes down to. Are you president or are you not president? Because he's letting the friggin' federal courts run roughshod over his executive orders. He's allowing Congress to tell him how to spend money when that's not their job. Their job is to allocate their job is to allocate the funds, and it's the president's job to spend the funds. So, and he's consistently over the last couple of months, which is why I've been frustrated with him, backing down whenever he's put an ultimatum on the table, right? So he said, well, we're going to shut the government down, Chuck Schumer, and I'm going to make it be your fault. And then he backs off on that. We're going to release all of the unredacted documents pertaining to Mueller's investigation. Doesn't do it. That all of these things over and over and over again, where he bluffs and then is called and then backs off. And this is the thing that's been most frustrating, because when it came to everything important, even little victories, he wasn't willing to give his base what they needed. So wall funding, not that I agree with the wall, which I've said before, backed off on it. So now we're 2 times now in 6 months, Trump has come out and said, practically out of the blue, we're pulling out of Syria. Our job is done. We're pulling out of Syria, which is what I told him to do a while ago. Declare victory over ISIS and get out. Right? And watching the stuff that's happening between the U.S. and Turkey and the negotiations that have been going on. I have an article up this morning, actually, on Strategic Culture talking about this, because I was looking at the headlines relative to Turkey the other day, and it occurred to me that Erdogan played all of this brilliantly. That the whole Khashoggi affair, he used the internal split in the United States government, where the deep state wanted bin Salman removed, and at the same time tried to destroy Trump's reputation. At the same time, Erdogan played everybody perfectly by dripping out the information, Lee Stranahan, Andrew Breitbart style, about the affair and about the killing, to make everybody look bad. And he played both sides against the middle perfectly, because the antipathy between the deep state, who wanted MBS removed, and Trump's influence in Saudi Arabia and diminished, backfired, as he kept playing both of them against each other. And then Trump has to turn around and give concession after concession to Erdogan on a number of issues. And Trump actually, I think smartly, also turned the tables on them as well with this move here. The big news behind this is that 10 days ago, Trump leaked that he's replacing General Dunford as the chairman of the Joint Chiefs of Staff. And Dunford has been the most vocal opponent of pulling out of Afghanistan, Syria, Iraq, and anything else. When you look around, what you realize is that the Iraqi elections left the United States with no position in Iraq. Erdogan is getting ready to push troops into northern Iraq, east of Manbij and effectively east of the Euphrates River, cutting off Kurdish supply lines in the north. Okay. And I think that behind this may be also that that this deal of us having to pull out of Syria with Erdogan has something to do with Incirlik, the airbase in Turkey that we use as a staging area for all of our operations in the region. And I'm sure that Erdogan finally threatened the United States with forcing them out of Incirlik to get what he wanted. Meanwhile, he's a part of the Astana process now. Came out the other day and said that, hey, Turkey can live with Assad staying in power as long as he passes, real and consequential elections or whatever, real elections, which is kind of rich coming from the Turks, mind you. But, whatever. It's mendacity and duplicity and foreign affairs and diplomacy is something you should expect as opposed to honesty. So a lot of this stuff is changing all at once here, and Trump keeps talking about his peace plan that he's going to unveil in a couple of weeks. And excuse me, I had a phone call that I had to shut up. And Trump keeps talking about his peace plan that he's going to unveil in a couple of weeks that no one's going to be happy with. Well, that's a good sign, because usually when there's when the negotiation, when the deal is put on the table that no one's happy with, it's usually probably the best deal that anybody can get. I don't know the details of it, but no one wants it. No one is happy with it. The Israelis aren't happy with it. The Palestinians aren't happy with it. Everybody says it's DOA. It probably is DOA. I even feel it's DOA. I'm not even sure quite what's in it. But if Trump is looking to pull out of Syria, and oh, by the way, there was a little known thing that was reported this morning on RT that no one's talking about, which is that the Russians have finally convinced the Iranians to pull all of their forces at least more than 100 kilometers away from the contact line between Syria and Israel in southern Syria. So this is consequential. This is important. And I think that's part of why Trump announced that this morning. I think it's why he announced this morning. Moreover, he has to do something to shore his presidency up because it's hanging by a thread. So now the real question is, best case, worst case. Okay. Best case is Trump finally realized that his maximum pressure campaign on Iran and Russia is not going to work, and that the neocons who he's surrounded himself with are not going to achieve what they think they're going to achieve. He's just going to put as much pressure on people as possible, and then eventually he's going to have to cave and come up with the best scenario for the U.S. as possible while he tries to pull the troops out. I think he may also believe that he's got his pieces in place for his energy dominance policy. And if so, we'll see. I don't think he does, but, we'll see. I don't care if he's delusional about this. I just want the troops out of Syria, and I want the troops out of Afghanistan. Another thing to remind you of is that we have been discussing with the Taliban rules for removal, right? Rules for us leaving. And we've been saying, well, the opening offer is that we would sign a peace agreement, but we still want to keep all of our bases here, obviously, because we want to be able to, deploy those troops and deploy those people against Iran if necessary. And that has been, completely rebuffed by the Taliban. So there's a lot going on here, and I think it's really important that we think this one through. I'm going to do another video on this for YouTube and probably a Periscope this afternoon as well before I take off for the afternoon, because this is big. But we'll see if Trump walks this back. I don't think the Pentagon's happy about this at all. I don't think that the Pentagon wants this. I don't think Mattis wants this. I know Dunford doesn't want it. So now the real question is, can Trump actually pull this off, or is he going to have to walk this back in 24 hours like he's done previously, since on every attempt by him to assert his authority as president since Helsinki. All right. I'm sure you guys noticed that the Belgian government fell over backing the UN migration policy, which is horrific. Good for Belgium. The Yellow Vest. I tweeted out yesterday, I note with delicious irony that the decidedly anti-globalist Yellow Vest movement in France has now gone global. It's now in Canada. I don't know if you guys, for those of you who are not on our private Slack channel, one of our regulars posted up a link to, all cheap yellow vests on Amazon. Got to get mine before they run out of supply. And the sad part about it is I was doing the exact same thing yesterday morning and almost tweeted it out. It's kind of funny, actually, when I saw it. I laughed out loud. Because we've got a lot going on here, and I think it's time that and I was on Fault Lines yesterday morning, and we were talking about the potential for this all being massive, coordinated desperation on the part of the Brits and the United States and Five Eyes and all of these groups that are who are out in the open now. The Integrity Initiative, all this stuff. It's so obvious that they're holding on to what they feel is their political power by the skin of their teeth. And then we have the FOMC this afternoon, right? And now we have the Fed, who Trump has pushed into a position where they cannot not raise rates here. The Fed's going to raise rates. They're worried. Nobody prints out an article on Zero Hedge this morning about that there's real fear in Washington that she's gone around, and that's fine for what it is. But the Fed cannot look like they have bowed to the president. They can bow to foreign central banks. They can bow to the IMF pressure to not raise rates, which they did in 2015, right? Where they delayed rate hikes for an entire year because of the situation with emerging markets. But they can't be seen as being subservient to the president. They have to remain they have to maintain the illusion of their independence. I think that they will slow the rate hike cycle down in 2019, if not stop them altogether. But I think we're going to get this rate hike, and so it's interesting. So when we talk about that, and then we talk about what's happening in response to the report this morning about us pulling out of Syria, we see that gold has broken through the 1250 area, which, we all talked about. Gold was setting up for a washout, I thought, later this week. It was doing nothing, was going nowhere, had run into resistance at 1251, and now all of a sudden it's moving higher. It's in the 1260s, which is great. Don't get me wrong. I'm all over it. I don't know that I believe it, and I don't know that I believe that it'll survive the Fed's, the FOMC statement, right? Behind the scenes. I just don't know that I just don't know that I believe that. I've seen this story before. I've seen this story too many times, where gold starts to run, the dollar starts to drop, and I don't know. Right now we're seeing stocks being bought, gold being bought, bonds being bought. It's like everybody's buying stuff. We've talked about multiple times over the last couple of months now. There have been many days of just people getting to cash, and just cash balances have been rising as people pulling liquidity off the table. And a report of Trump showing some spine as president and pulling us out of Syria severely de-escalates the situation in Syria, and therefore removes the war premium. Now, normally, right, if some kind of gold usually runs when there's the threat of war, and then as everybody goes to cash, and then once those war drums abate, gold gets crushed, which is, they use that headline cycle for those for these kind of short-term manipulation purposes. To create false signals. The opposite is happening here. Liquidity is so tight that removing the threat of war, or threat of continued war, threat of continued hostilities between the United States and Russia and everybody else, is actually loosening liquidities a little bit, bringing some money onto the table, and gold is actually responding to a weakening dollar, which I think is really interesting. All right, so let's talk about this. Now, this is a chart I pull up every once in a while. I've been making this chart for about 4 years now. Every month, every so often, I have to go through and update my big spreadsheet on the Fed's 8.4.1 report, which is the weekly statement of the Fed's balance sheet and various dispositions thereof. This is the important one. I have tons of charts that I've built over the years just to kind of keep my finger on the pulse of what's happening within the Federal Reserve, to see if there's any anomalies, to see if there's any weird behavior. And there have been some very weird moments in the Fed's statements of how many mortgage-backed securities they own, how much Treasury debt they own, stuff like that, where like week after week the number didn't change. Like that never happens. It always changes a little bit. When you own 1.7 or 1.68 trillion dollars worth of mortgage-backed securities, to tell me that you traded actively in the marketplace less than 100 million of them in a week, and that the actual number didn't move for 3 weeks when they normally move over a 3-week period anywhere from 10 to, $15 billion, I'm skeptical. I saw that in some of the data, but I just, it's like everything else. You can't go crazy about it. This happened back in November. It was obvious that at some point they were either distracted, out of the market, or something. And why were they out of the market? If they weren't moving any mortgage-backed securities for 3 weeks, why is that the case? It's because the market completely seized up and there was zero liquidity and there was no way to buy and sell. That's the kind of thing that should tell you. It's the kind of tell that you why, and it's why I do this. It's why I go through all this, because it helps me to keep my hand in it, even though I can't keep my hand in it every day. I can't do it. I don't have that much bandwidth to look at all the things that I'm looking at. So every 4 to 6 weeks, I'll go back and start looking at the Fed's balance sheet, and I'll start to see if I see some underlying or interesting trends. So this is, now that you've had a chance to read all this, this is a chart of the aggregate of the amount of U.S. Treasuries held in trust by foreign central banks at the Federal Reserve, right? So this is the stuff that's held in liquid form in New York, in accounts in New York, held on reserve with the Fed, right? The total number that we get pushed out by the TIC report every month, which usually winds up in headlines: China dumped $10 billion worth of Treasury bonds, or Japan dropped $5 billion worth of Treasury bonds, or whatever. And that's depending on who's reporting it, which is usually RT, and they usually way overstate the importance of it, but whatever, it's RT. That's the aggregate, right? And that number is somewhere close to $6.3 trillion. This is the amount that's actually held. Is right now right just above $3 trillion is held on reserve with the Federal Reserve. They're gaining interest, doing what it's doing, getting paid, and in a liquid form that it can move if need be. So the directional change of this is important because it tells you some stuff that's happening within the currency markets and in the bond markets. So what we're seeing here is, this is when the dollar was weak, right? After Trump's election, we saw, and what we always see is that central banks start loading up on liquid treasuries, even if their totals don't change. The total can be flat, for example, but this number can be rising, meaning they're draining their onshore reserves and they're leaving their reserves in more liquid form. That to me tells me that they're worried about, in that scenario, they're worried about being able to move a lot of stuff quickly, move a lot of their holdings quickly in order to make ends meet, right? In order to balance the currency markets. That happens. But this was just, in general, dollar weak, they're loading up. They're buying. The central banks aren't stupid. They buy when the dollar is weak. They buy when bonds are cheap, when they're selling off, and they sell into strength. And we saw we're seeing strength now, and they're selling into it, and that means they're starting to get worried. And note that we've broken that low there, and we're moving towards that level there, and number of down weeks here is very, very high relative to and the magnitude of these low weeks is really high, the selling pressure. And so that's what we're seeing right now. And that tells us we're probably going to continue. I think we're going to continue to see that going into the end of the year and into Q1, which they need to do, because I think this move down in the dollar today and whatnot the last couple of days isn't sustainable. I've showed you the dollar index chart. I've showed you charts of the euro. The euro's trading at a little over $1.14 today, but it's not moving out of its range. It's running right smack dab into resistance, just like gold did for a few weeks. It's a move up above $1.14 on the euro is just not interesting. $1.16, that becomes interesting. $1.18, that becomes very interesting. $1.21, and now I got to reassess my thesis. That's the kind of thing I'm talking about here. 50 pip move one way or the other is nothing in the euro at this point. There's so much bearish overhead, and given what we're seeing in Belgium and France and Italy and Spain and Brexit and everything else, why would anybody be bullish on this right now? All right, so just wanted to let you know that watching this is an important indicator of what's happening with the central banks where their heads are. And their heads are that they're going to sell the rally mentality in order to defend their currencies, and they're going to do so with their liquid short dated funds, holdings, which could easily create. Because remember, central banks at this point, they're all dealing with less than. A lot of them are dealing. They usually buy the long end of the yield curve, but at this point, it looks like a lot of them have moved to shorter and shorter maturities. So that may be part of the source of the yield curve inversions that we're seeing between 2 and 5 years. I may be wrong about this. I'm just kind of spitballing here. So if anybody has insight as to what they think is actually going on, you're more than welcome to leave comments and educate me as well as anything else. So as everybody else, right? So, and the last thing I want to talk about is that we have a very interesting rally beginning in Bitcoin. I was talking about this with one of our guys on Slack this morning who actively day trades Bitcoin, and we noted. I told you that I wouldn't put Bitcoin on the market report unless something interesting happened. Well, we've got something interesting. We've got a move above 36.77, which was last week's high. We now have a very strong short covering bounce here. But it does not get interesting until we get, up into this range, 34.30 or 43.30 or so, and 44.00, 44.20, depending on what you're talking about. This is the aggregate investing.com Bitcoin index that we're looking at here. We're not looking at we're not looking at Bitfinex's data or any of the individual exchanges. I use the investing.com index for this. So right now it looks very strong, and a move above 4,000 would probably induce a little bit more short covering as they play round number bingo, as Jim Sinclair likes to put it. You hit a big round number, and guys just like to short at the big round number. It's not really technically significant or anything. It's just the big round number. And the same thing happens in gold: 1250, 1300, 1400, 1500, 2000, that kind of thing. So those are psychologically important numbers, not particularly technically interesting numbers. So let's watch this in Bitcoin to see what happens here, because any move back above 4,000 here, or certainly back above 4,400, which is where the shorts are going to come in. But if there's a real sentiment shift in the crypto markets, which I doubt, but if there is, it'll be a break. There'll be these breaks here above 4,400 or so that will then probably push us right back towards $6,000. Because there's no air here, there's no volume here, right? And there's not a lot of positioning in between 4,500 and 6,000. All this shit broke down in an hour and a half. There's not a whole lot of volume in here. So this is, if you start looking at you start dialing into the daily and the hourly charts, you're gonna just see freaking gaps all over the chart. Not that there's gaps in Bitcoin because it trades 24/7, but they'll be the equivalent of gaps. It'll be such low volume that you will see this fill very, very quickly. And then I expect the shorts to come in at 6,000 and say, okay, enough is enough. So, but 4,400 first, and then potentially 5,000 and 6,000, if this is real. So, as far as reversal numbers are concerned, I will have something on once we have a weekly close on Sunday. I'll put up the probabilities for those for next week. But at this point, volatility is similar, hasn't changed. All right, that's what I've got for you guys for this week. We'll stay in touch over the public channels as well. So if you guys have any questions, comments, whatnot, please leave them down below. Things you want me to cover, please leave them down below. The global economy looks bad, but the Fed is kind of trapped by Trump's own ham-fisted public announcements. It'll be interesting. All right, you guys take care. You have a great afternoon. Be well. Keep your stick on the ice.